The lack of cues for the markets continues. The markets have just been dragging their feet in a very, very narrow band. 18,000 at the peak of last week, 17,000 thereabouts at the bottom end. And no clear trend clearly in the market. Even if you pick up the top 5 movers, there's not one sectoral trend that you can really pinpoint for the market. The long unwinding, of course, in the F&O markets continues. Remember, this week you've got F&O expiry as well to deal with. So hopefully some amount of traction either on the upside or downside is what we can expect to actually pick up. But that said, no US cues as well overnight. Remember, US equity markets and bond markets were shut. So we're staring at, once again, Nikunj, an absolutely flat start on the SGX Nifty.
Aisha, there are phases in the market where there is fear. There are phases in the market there is excitement. There are phases in the market where there is lack of interest and just low participation. And that's the most boring phase.
This is one of those.
This is one of those phases. Unfortunately, this phase has really, in terms of a Nifty, it has really extended itself. The word range bound or the word listless is something which I think is at play for the better part of 2023. And 2023 has been one of those years of hectic news flow. Adani sell-off, what's happening on the geopolitical front, earning season which has not been very great. The news has kept us busy, but that has not generated any upside momentum, or that has not really pushed anything down the barrel, at least for the market. So one of the phases of the market where I guess you have to accept and recognize and acknowledge the fact that this is a range-bound market which perhaps is hunting for a trigger to generate momentum on the upside, or or some kind of a ripple which will take benchmark indices below the key support levels. What drives the market in the short term? I guess it is always news and flows. News has dried up completely and flows have been completely wishy-washy.
Yep, that's exactly the way it has been. There's just lack of cues. You were saying you want to talk about cricket.
This summary is like a summary of the show. Now, next 2 hours, I don't know what we will discuss. 5 minutes, we know what the market setup is. We can actually say, okay, show over, let's go home. Nothing to talk.
But you don't know whether this is the calm before the storm or the calm that's going to pick up the markets up.
I can argue both ways, and I'll give you a perspective here. I'll try and do it. If you're a bull, you would say whatever could go wrong has gone wrong. And the Nifty, in a sense, has still held out, and it is still above key technical levels. The bears would argue and say that, okay, what's next now? There is nothing in terms of an upside momentum, and the fact that the market is running into resistance at higher levels, which means supply is much more than the demand. So you can argue both ways, at least for the moment. But the Nifty data is just telling you the real story, if you frankly ask me, in terms of level of participation, the total delivery volume, and what is happening to the F&O market.
Yeah, maybe we should pepper the show with a little more chat about cricket and Bollywood, because it's absolutely dull. Even when you look at the Asian screen, there's nothing really happening. The trend on the SGX Nifty as well is absolutely lackluster around the 17,877 mark. And let's take it straight to how we shaped up in yesterday's trading day, the start of the expiry week, and nothing to really shout home about. So quiet as ever, forget 18K. Yesterday it was a challenge to even hold on to 17,850 as we wrapped up the day 0.5% higher. It was the broader markets in comparison that did mildly better. Second straight day that you saw FIIs that sold in trade. PSU banks were a big drag, but they weren't isolated. It was across the board that you saw selling coming in. And in terms of what really managed to be your lone soldier in the green or really hold out was tech, definitely, and then select life insurance stocks. And then you also had the currency that was upbeat on brokerage reports. So, Nikunj, anything to add basis what happened Monday? Silence.
No, let's look at an important, comment, some comments which have come from Mr. Kotak. And the Kotak conference is on, and where Mr. Kotak, in a sense, was addressing to the institutional investors. And his general messaging is that the best of the peak growth for India is behind us, but you will still grow at 6% plus. And if you'll grow at 6% plus, you will be in some kind of an enviable spot, at least in comparison with the world. He is also indicated that the slowdown, I think, is something which is obvious. And post-festival season, there seems to be a marked slowdown in consumer discretionary and consumer staples. He's clearly of the view that there is no interest rate shock, at least in the world right now. And in general, there is an important message which has come from him that they are looking at increasing their unsecured book. Now, Kotak has been very conservative in terms of taking a stance of not growing the unsecured book. But for the first time, Mr. Kotak has come out and said that they're looking at increasing the unsecured book. And that is something which could be an interesting one. NIMs might have peaked out, but can be managed, which means he's also hinting to a fact that the best of the margin picture what we saw for banks for the quarter gone by may really be a peak. Never seen such fast cycles, and that is a realization for all of us that in less than 2 years, from a world which had no concerns on inflation, we are now only obsessed with what will happen to rate and what will happen to inflation. So that's today Kotak acknowledging and indicating that the peak, the COVID sugar rush is clearly behind us, but you're still in a good spot.
Yeah, he's saying that never seen such fast cycles earlier. Extended rate hike cycle risk may actually hurt asset classes, and that India has emerged as one of the stronger nations. Buying fuel from Russia at a discount benefit India clearly, saying that important for India to be current account surplus, and that he expects India to achieve 6% real GDP growth in FY24. Also saying that signs of discretionary slowdown are visible, encourage government to focus on capex spending, and that he sees strong banks credit growth at 1.5 times of nominal GDP. He's saying NIMs might have peaked out but can be managed.